everybody to Xeva TV. I'm glad you joined us today. We've got Jake from Glasslake. We're going to learn who Glasslake is because they're relatively newish out here on the West Coast. And probably not too many of you have heard of them before. So we're going to jump into that. But we did get a rate cut as expected. And we're going to see what that does for business. Aren't we? We're going to see what that does for business, and we're going to see if the bond yields cooperate and we start to see some lower fixed rates, even if it is for just a few minutes. Maybe we get a little stability and maybe we get a temporary floor in the market before the next leg down. Are we in a full recession? Probably. America's probably going to be in one too, so it's going to be interesting to see.
I agree.
Our real estate values typically don't fall a lot. If you look at the last couple of recessions, we really haven't had a recession, like a real good one for a while. It happens when you have a bottomless pit of immigration and zero interest rate policy for a long period of time. And so it's going to be interesting to see how that goes. But our values typically don't fall that much in the lower mainland through a recession. So it will be interesting to see how this plays out over the coming months and years. Let's jump in with Jake here. Let me give you a little bio. Firstly, thank you so much for joining us, man. That's great.
Andrew, thank you so much. Appreciate you and the Xeva team having us this morning. So really excited to be here.
That's awesome. Jake just flew in, by the way, straight from the airport, overnight flight from Toronto, just to be here today. He's flying back out in an hour. Not true. He lives here now. Okay. Jake is the sales manager for Western Canada at Glasslake Funding. How long have you worked there before you came out here?
So I was working at Glasslake since inception. So when we were kind of building the business and starting, so I've been there since 2002. So a little over 3 years now.
Oh, wow. 2022. Okay, so 3 years. Okay. That's right. You were relocated from Toronto to lead the West Coast expansion. It's pretty sweet, right? Like, good time to come for the winter.
I'm not moving back.
No, this is what happens. Like, no, you have the winters there. And you're like, no. 8 years you spent in the alternative lending space, in underwriting and in sales. So what got you into that? Because you had a sports management background in university, right?
I did, yeah. So ironically enough, what I'm doing now has nothing to do with sport management, but I guess ironically, the person who got me into mortgages was a gentleman named Sean Lyons. He was the CFO at Home Trust.
Okay.
And I played hockey with his son growing up until I was about 16 years old. He kind of got me into it. Didn't really know what I wanted to do kind of for a summer job. He's like, hey, we have internship opportunities at Home Trust. Would you be interested in doing that? And I was like, absolutely. So I was kind of the paper boy filing stuff, and eventually that role kind of moved into a full-time position and really took a liking to it. Was underwriting there for about 3-4 years, and then started getting into the commercial side of the business, which I really enjoyed. And then a sales opportunity kind of opened up, and our president now at Glasslake Funding, he was one of the EVPs at Home Trust.
Okay.
He got the opportunity to open up Glasslake, and asked if I wanted to kind of tag along and move over. So it was an exciting opportunity to work for a startup company with a lot of liquidity backed by a US hedge fund, and I think we were kind of creating a pretty cool opportunity there, so decided to make the move.
Wow. Okay. It's amazing. Like, this industry is, I mean, everything in life, but relationships.
Yeah.
Right. So look at how you came in relationship wise as a young kid playing hockey. Right. I mean, he obviously knew most of the kids probably pretty well on the team, but he talked to you about it, right? So that says something about your character and what he saw in you, and then boom, 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 here we are, right? And Home Trust gives you a good foundation because they're busy alt lender, who do a lot of stuff, right? So you got to see a lot of different things there.
Absolutely.
Awesome. So Jake likes to golf, and he plays pickup hockey because he played junior hockey for the Surrey Eagles. And then he went out at the University of Brock, and he played out in Cornwall as well. So played lots of hockey. So he still does that a little bit here and there. And how did the sport transition to like this industry? What did you learn playing hockey at a high level that has helped you here in business?
Yeah, that's a great question. I think there's so many things within sports that are applicable to kind of what we do day to day here. I think working with the team, being able to cooperate with your team, your middle, the middle floor, your senior managers, whatever that may be. I think working collectively as a team is something that, you learn by being a part of a hockey club. Um, but I think it's going through the ups and downs, experiencing challenges. How do you mitigate those challenges? How do you work together to kind of find resolutions? I think being a part of a team, you'll experience those ups and downs, and you can kind of transfer those over to being in mortgages and kind of being in the operation that we're in today. So, it's funny, guys. Glasslake, we're still somewhat of a bit of a startup, but we're kind of getting out of that now. But we experienced a lot of challenges, a lot of ups and downs. It was almost like being a part of a new hockey club. So I think a lot of that actually just transferred over to the company that I'm at today. So which is pretty cool.
Hmm. Very cool. Very cool. All right, we're gonna jump into it. Thank you for that. Segue into some core questions. I was telling Jake, like, we do this all year, but the summer we take off. So I'm a little bit rusty here, but the questions are top of mind. So you kind of answered how you got here and why you chose to work with this lender 3 years in, and you got the opportunity to move out here. What are the current that you see anyways, political, economic trends affecting the landscape here in Canada, and how has that helped hindered your business?
Great question. So, I think just to take a step back, and I was on the panel yesterday, and I mentioned this as well at CMP. Um, I think historically the private space was known for short-term money, right? It was, helping clients with challenges with, their credit, their bruised credit. They have, their income challenged. It could be the uniqueness of the asset. It could be location of the property. And generally it was a short-term option. But now what we're seeing within the market is, that subset of borrowers actually continue to widen. And these are now near prime borrowers that are seeking making private financing. And I think the reason for that is not only B20, I think, interest rate volatility and the market conditions, but I think there's something to be said for ease of underwriting and flexibility. And, these types of borrowers now are leaning to more towards that ease of underwriting and flexibility because, these are real estate investors that have multiple doors and they're capped with a certain institution. We don't have a cap. I think when you look at the stress test, the LTI limit that's put in place now, it's become increasingly more difficult to qualify a deal. So, we don't stress test the file. We have extended amortizations up to 40 years. So we provide that flexibility. But, that, like I said, that subset of borrowers has continued to widen. What we're also seeing too is a trend for longer term and duration.
Okay.
That path to graduation has become increasingly more difficult. There was an article in the Globe and Mail just recently around six of the major banks. Their arrears have spiked, I think, anywhere between 45 and 60% over the last year. So, affordability has become a challenge. So I think what's exciting now is more people are looking at the private and mixed space. Because of the flexibility, what we can offer. But I think a lot of these private lenders now have that liquidity that can compete with the B lenders and some of the other larger institutions and can provide solutions where they're paying down principal and interest. Maybe it's a little higher interest rate, but they have the longer amortization that allows them to kind of manage their cash flow, better manage their monthly obligations. So those are some of the trends that we're seeing internally, and I think to that point, a lot of these private lenders are becoming more institutionalized. So the sophistications there with the underwriting, and I think we forget the DNA of these private and mix shops. These are extremely experienced bank and alternative lending experts, right? That have been in the space for a long period of time. So that underwriting sophistication is there, but also the investment in private and mix mortgages is also there. We've made the investment in technology with our risk management tools, with compliance, but we're also seeing, more people getting into private mortgages, like some of the larger pension funds, some of the larger hedge
Yes.
funds in the
Yeah.
US are getting involved. So I think it's an exciting space to be in.
Yeah, definitely hard assets, definitely a place to be in. Is very uncertain. Let's just use that word because we never hear this word these days, do we? I'm going to add a few more people here. One second. Um, Uncertain times, right?
That's right.
Uncertainty. We covered uncertainty last week, right? Is uncertainty is not knowing the potential future paths that we could go. That's the risk is when you can put a little percentage on the different paths forward, but uncertainty is what are the paths forward.
That's right.
And so putting money into hard assets is and generating a pretty nice rate of return pretty consistently over. I mean, if you look at the successful mix out there and privates out there, their returns have been extremely consistent year in, year out for decades. And so that's I agree. That's why pension funds are looking at that space and spending more money there. So how you said you have a is it a pension or a hedge fund out of the US?
That's right. Yeah, we're backed by Bayview Asset Management, so they're a global hedge fund.
Make
They
huge dollars. That's
Yeah, they're one of the
amazing.
largest hedge funds in the US. They have several different other operating entities across the globe. They have, other entities across Europe, other parts of the US, and Glasslake's the Canadian entity under
Okay.
Bayview.
Oh, awesome. Awesome. Yeah, Mark Carney's a shareholder. Um, so you kind of actually covered off a couple of these questions, which is awesome. You mentioned some technology that you guys are using and risk management. Are you using any agentic solutions there at all?
AI?
Yeah.
Yeah, so we're using it today in our doc or in our fulfillment, doc review. We use it on our bank statements. We're using it in fulfillment. I see AI actually being complementary to our business. Not only to improve efficiency, but I don't think it's going to replace what we do on a day-to-day. Maybe more so in kind of the A side where they're a bit more cookie cutter deals. But I think in the alternative and private space, there's still a human element that's involved where, you have to be creative, find solutions, be flexible in how you can get a deal done. So I don't think AI will remove our roles completely. I think it will help augment some of the challenges we maybe experience from an efficiency standpoint. But yeah, like I think we're starting to do that now. I use it every day, to be honest with you. If there's certain proposals I need done, I'll draft it up and I'll throw it into AI and make sure it's done up more professionally. But I think it's only going to complement our business.
Very, very, very cool. Ah, just had a thought in my head off topic. I'll keep it. I'll keep it there. Well, we're gonna get in because we haven't learned anything about you. So let's just jump into some of the nuts and bolts of Glasslake. So give me right now, just give me some statistics from your company. Let's talk what's your average beacon?
Average beacon, shockingly enough, is around, I think it's we just pulled it the other day, 750
Okay.
beacon score.
Average loan to value?
Average loan to value is probably about 65-70%.
Oh wow. Okay,
Yeah.
pretty high. Do you guys do like what's your book first and seconds?
So we only do firsts, no
Okay.
seconds. I would say the bulk of our business is residential. We probably do about, I would say, 70% of it's residential, and then the remainder is small commercial or commercial.
Okay. Okay. Do you like I mean most privates do, but big geographies?
We have a massive geography, and I think that's one of our key differentiators.
Okay.
Is so we like prime markets, prime real estate, of course, but we go into the secondary and tertiary markets. And a unique differentiator for us is we don't have a sliding scale, so we're still very aggressive in some of those smaller markets. The trade-off for us, though, is that we're looking at a little stronger credit. With our flexibility, with our aggressiveness in lending areas, the way we look at the deal, the trade-off is we want a stronger beacon score. So that's why our average beacon's around a 750.
I like Jake. He used the word trade-off there. It's one of my favorite words. I use it every day, probably a dozen times with clients. It's so good. So good. 65, 70, you mentioned that is relatively high from what I'm used to seeing in the marketplace. So that's good. That's really helpful, actually. I know, especially if you're looking at secondary, tertiary markets and things like that, for sure. First only, good to know. A couple more things to that. Inter alias.
Yep. We'll do intro dailies. It should, if it's challenging just because we don't go in second,
Yeah,
so.
yeah, exactly.
You know,
It has to be free and clear.
that's right.
Makes sense, or you have to pay something small out.
Yeah.
Tell me about a standard fee structure, a deal for you guys.
Fee structure for us, it really just depends on term length. So the shorter terms for us, we typically charge a 2% fee and we'll pay finders of 60 bips on our 1 and 2 year
Okay.
term. And then on a 3 year, we charge a 1.5 fee, pay you 75 bips from there. And then anything above that, like we can go up to a 7 year term if you really wanted to. Anything after that's a 1.5 fee and we pay you one. All of our commercial pricing, commercial fees are 1.5, and we pay you a full point on commercial as well.
Okay, so they're paying us, so we're not collecting our own fees here, so that's a key point of differentiate for sure for you guys over most mix. You're a MIC, right?
We're institutional.
Yeah, sorry, institutional, that's right, that's right. So, yeah, so they pay 60 bips on a 1 year and a 1.5% overall fee, so that's nice. That sometimes can help you when you're having a hard time asking a client for a fee.
Mhm.
Some brokers have a challenge positioning themselves in that situation, especially early on in their careers.
And we can also, Andrew, we can be flexible on that as well. Like on the 1 and 2 year, if you need us to, we can look at a 1.5 fee offset and rate and still pay you the finders. Like we can get creative and whatever you really need to sell the deal. Like we're open to doing that. So.
That's awesome. So those, typically as a standard deal, do you amortize and collect a little principal? What is it, 30, 35, 40? What do you use? What's your typical?
We standard is about 35.
Okay.
It's 35 year AM. We can go up to 40 years if need be, but yeah, it's principal and interest pay down. We do have interest only options as well if
Okay.
that's something that they're looking for. But yeah, standard is about 35 year AM for
Okay,
us.
so similar to VWR there for anybody out here that's used to some privates. And open, closed.
Closed
You're closed on most terms.
on all terms. Yeah, like we're a cash flow lender, so we like holding on to the client for a little longer term,
Okay.
so we're not fee driven. But yeah, there are closed terms. The penalty structure typically is anywhere from a 3 to 5% penalty of balance. Now the longer term stuff that we do, we have a bit more flexibility there. We can offer declining rate prepayment options. So like on a 3 year, it's like a 3-2-1, so 3% on the first year, 2% on the second year, and then 1% on the final
Okay.
year.
Of the balance
Correct.
at time of payout.
Correct.
Interesting. Okay.
And on that point, to Andrew, just I think when people are reaching out to us, they're like, well, do you have a little bit more flexibility in the penalty? I mean, we can look at that. I think what it comes down to is just really understanding the story and the client scenario, right? So, the client that's behind in some back taxes maybe needs a 6 to 12 month term to kind of clear that up. Our solution probably doesn't make sense.
Yeah.
Right.
Mhm.
Comparatively, if you have a plumber who's been self-employed for the past 5 years and has a high TDS, doesn't show much income, that's probably our deal. Like a 2-3 year term is probably going to make sense. That client probably doesn't show any form of graduating anytime soon. So I think you're really just recognizing the deal and knowing kind of what's our deal.
Yeah.
That's helpful.
That's a big one. It's a big one. There's not a lot of privates out here who have that model. So that's unique. That's a unique selling proposition here. And that definitely, I mean, we all see those. Anybody that's been doing this for a while and talks to private, you see people in this where they're like, there isn't an exit strategy in the next year. There's no chance, right? Like just zero. Like there's no way there's
Yeah.
right? And so so that's good to know. Can clients make prepayments to bring that penalty down along the way
They can.
on a closed term?
They can. I believe it's up to I think it's up to 10% on anniversary.
On anniversary.
Yeah.
Okay. So that's cool. That's very good. What about renewal? Renewal is something that a lot of brokers don't ask when they're initially setting up a file, and then it comes back to bite them because they're not sure. And then the client's like, "What is this?" So talk to me about renewal a little bit.
$500 just to renew. So relatively cheap renewal fee. What was interesting, we just went through our first renewal cycle internally. And I think we were anticipating a renewal rate of around 50%. What was shocking
was higher.
Higher, yeah. So it's so closer to 75%.
Yeah,
So
that's about industry average these days.
yeah,
Ever since the COVID, we saw renewal numbers spike quite
yeah,
a bit. And I mean, especially with your closed terms, that doesn't surprise me.
yeah, yeah. But I think it's interesting, right? Like there's, you look at some of these deal scenarios where, I think for the most part, and you want to be optimistic, but when you look at ratios, you look at their, the challenges around the income, could be the credit as well. Um, that form of graduation, it's probably not there. It's a difficult conversation to have with your borrower.
Yeah.
There's no doubt about it. But some of these deals that we are seeing coming up for renewal, those conversations were had, right? So, yeah, I think it just comes down to really, again, just really understanding your client's situation and is that path to graduation realistic?
Yeah, awesome. So at renewal, you're looking to make sure the property taxes are paid. They don't owe any. Are you looking for a clean NOA
No, we don't even look at NOAs.
ever?
No.
You heard that? No NOAs. So yeah, give me that to that end. Segue, doc. A lot of private saying low, no doc. What is your criteria typically?
So I'll stick with residential.
Yes, yeah, residential mostly here.
Okay. So the bulk of our business is our self-employed bank statement program. So we just look at the client's 6 months of bank statements, and we use the net income from the stated income letter that the client states.
Okay, so you use an attestation form.
Correct.
Oh, interesting.
Correct.
Okay.
We don't require financials, don't require NOAs, just 6 months of bank statements. And then just articles or business registration of the
Okay.
business. If they're full-time or their salary, just a job letter, pay stub. We have a really unique program. And I would say it's specific to some of the secondary, tertiary markets where values are a little bit lower, but we can qualify just on cash flow alone. So it's called our DSCR program, where it's extremely low doc. You're only looking at an appraisal with the market rent, and if it's a refi, we'll factor in a lease. But as long as the property can break even, that's all I need. Just the appraisal, lease agreement, and market rent. So it's great. We're seeing that a lot with real estate investors that have larger portfolios that don't want to do a TDS, and you're providing all these non-subject property docs, right? So it's a very low doc. You're just qualifying on the subject property income. And as long as it breaks even, we can do it. So we're seeing a lot more traction with that, where values are seen to be a little smaller, where rents are a little more stable. That's where we see some traction with that program.
Okay, very interesting, very interesting. For sure. Because yeah, I don't know if you guys are picking up on this, but this is a very unique private lender. You guys are very unique. We don't have a lot of lenders in our space that offer this type of a package. You are doing some docs, some don't do any, obviously, but typically their loan to values are lower, blah blah blah. This is why now I understand 60 to 70%. This makes more sense. This is tracking for me. Starting to put the dots together. What is a rate for a client, a BFS, that client right there? They have a detached property in a city, whatever it is. They need 60% loan to value. What is that rate today?
At 60%. So all of our pricing, Andrew, is driven off of Beacon score and LTV.
Okay.
So depending on the credit score,
Yeah, they're 750. They're good. They're clean.
750, you're and at 60%, you're in the fives. I would say probably 599. Our cheapest rate right now is 549. It's a little lower loan to value, probably
50% or lower.
Yeah. And then I would say on the high end, you're probably 7%.
Oh, okay.
On residential. So, but yeah, 60% LTV with good credit, you're in the fives.
So this is like more of a near B program.
Yeah, our pricing's more closely similar to a B program.
Yep.
B pricing.
Okay. So yeah, there's a couple of lenders that fit that criteria, but still very unique. So this is good. This is good because I've seen people like this in the past that would fit a program like this. There's more and more of these people in the marketplace, as I'm sure this is why your growth has been so good and so strong. So that's really cool. Turnaround time. What are we rolling with?
We're anywhere, I would say, like, we're extremely busy right now, but I would say 24 to 48 hours. Generally we like to get into it right away. I would say 24 hours, but today we could get up to 48 hours. But I think being in the private space, you need to be quick and nimble. So,
Yes, you do.
we can turn deals around. We've funded some deals in 48 hours, so it really just depends. But yeah, let's say 24, 48
Pretty
hours.
quick,
Yeah,
pretty quick, and then doc review. So like a couple weeks.
Yeah.
You get a deal done in a couple weeks. Pretty
sure.
straightforward. Who's the firm that you're using out here? Legal.
For legal, right now we're kind of just testing the waters, right? Like,
Okay.
we're using a couple different ones.
Okay. See if you
like,
can find a fit.
yeah, we use
It's good to have a couple of these.
Yatman and
Yeah,
bigger,
is your
bigger players.
yeah, all the usual. Anything that slows down apps that we can focus on for your firm, anything that matters a lot for you guys.
I think really just a detailed notes, and I know it gets said a lot. I get it. But
Every time, actually, it gets said every single time I ask this question.
but it
Which makes it nice to just hammer that point home, right?
it's true though, and and I think listen, we understand it's a hairy deal. That's why it's coming to us in the first place. So just be transparent with us because we've seen it all, right? And we can make those deals work. So I think just being transparent with, if there's hair on the income, or if down payments coming from overseas, just tell us, let us know.
Yeah.
We'll find a way to make it work.
Awesome.
Just finding those mitigants early on will allow us to be quick with your file, be more efficient, and get it to closing a lot
Right.
quicker.
Nice. So send in the application. Do you accept digital files through Velocity?
We do.
Awesome. Do you want us to run them with you first, especially early on?
I would, yeah,
Yeah.
I would, yeah. Just a call or an email, whatever is easier for you guys.
Yeah.
But yeah, just a kind of an initial vet for us, just to make sure the deal works. I just don't want to waste any of your guys' time. And,
Totally. Same with yours,
yeah.
of course. And then what would you say? So he's from Toronto, so he works 16 hours a day, 6 days a week, about 100 hours a week. Of your 100 hours that you're working, break down a traditional week. How much of your time is spent doing the different areas of activity for you?
Yeah, so it's a little bit of everything. And right now my travel schedule is up a fair bit, so I'm flying quite a bit. So apologies, guys, if you reach out. I'm a little slow to get back to you. I'm trying to get back to you within a couple hours, but I'm looking after all BC and Alberta. I do have a couple of accounts in Ontario as well that I look after. But for the most part, it's getting on the road, meeting with my targeted brokerages that I work with,
Like here,
like Xeva,
like right
of
now,
course.
like today.
And then the rest is, fielding your guys' calls and inquiries with deals and structuring deals. That's kind of what excites me about my day, is finding ways to get deals to work. And so I would say probably 8 hours of the day is structuring files, getting deals in the door, and then the rest of it's kind of on the road, meeting you guys and building relationships.
Don't call him tomorrow morning, except really early when he's on his way to Whistler to golf. Unless, are you going up tonight?
No, I'm going up tomorrow afternoon.
Nice. He's golfing this weekend, so don't call him this weekend, or FaceTime him, and maybe you can watch him drive. Apparently, he's really good. What is your handicap?
Used to be better. I'd say 5, 6 handicap now.
Ooh, used to be better too. Scratch. This is what hockey players are. They are typically pretty good golfers. We have some good golfers here.
Gotta get out. Gotta get out and play.
Yes, I am not a 5 or a 6. I am a 5 times 3.5 bogey golfer through and through. Don't play enough. So we talked about this a little bit. We talked about who your investors are. Yeah, what sort of growth targets are you guys looking for on the West Coast here? Obviously, it's new. So what sort of growth targets are you looking for? How many assets under management do you guys have overall at this point? You literally pretty much have it's not unlimited, but it's essentially an unlimited funding base with Bayfield. So
Yep.
Bayview, sorry.
Yep. Well, this year we're on track to close to $1 billion. We'll have $1 billion under management this year. So we're growing at a fairly rapid rate.
It's 3 years in, guys.
Yeah. And our I think we've set some lofty goals for next year as well. But we just launched our large commercial program now as well, so we're branching into larger commercial stuff. We just completed a fairly large transaction in Ontario, so that's starting to contribute to our overall portfolio now. But in Western Canada, I think we're getting fairly close to a half, close, I would say we're at quarter billion right now.
Okay.
So we're moving towards, I would say, a half a billion by next year.
Nice.
But yeah, and that's a breakdown of both residential and commercial. So
Nice.
we're pretty excited.
Nice. We're gonna jump into some questions. Before I do that, you got a minute. Anything that you want to talk about that we haven't talked about yet that you really wanted to say today?
Um, yeah, I would say so. I, I get this question all the time. When do I place you guys? Like, I'm still trying to figure out where to place you guys. So, I would say the ideal deal for us is your B lender kind of turn down business, whether it's Equitable, Home, whoever it may be, whether it's a non-conforming deal. It could be the location of the property where they're scaling back. It could be even the size of the loan. Like we'll entertain. We have no cap on loan amount, so we can look at something as small as 2 million, 200,000. We can look at something as high as 10 million. So we're starting to see those larger loans. But any of those fallout deals there, we can generally do those with our flexibility, with our bank statement program, how we look at income, longer amortization. So those are really the deals that we see. And even if you guys get commercial inquiries as well, and I know oftentimes, like when I speak with some of these brokers, they're like, oh, I don't have any interest in it. It's the length of the transaction takes too long. I just passed it off to my more experienced, a commercial broker in the office. Hold on to those deals because the way we look at commercial is quite unique as well. We look at a commercial deal essentially with a residential spin to it. Our owner occupied commercial program is we look at it the exact same way as we would residential, stated income.
Okay.
And then for investment properties, what we can do, anything that's non-cash flowing or if anything doesn't break even, I can do a TDS on it. So it's basically the same underwrite, just with a commercial property. And it's I would say it's probably an additional 10% revenue for you holding on to those deals easily.
Mm.
And then so yeah, if you guys see commercial deals, reach out. We're happy to help kind of assist you. We'll run through a workshop, whatever it is that you guys want to do around that. But
Cool.
yeah.
Awesome. That's awesome. Thank you for that. A couple questions. Leasehold.
Yep, we'll do it.
They'll do it. Awesome. Leaseholds doesn't matter. Just leaseholds. You'll do leaseholds.
We'll do leaseholds. We see them in North Van. We see them in UBC.
Ravenwoods.
Yeah,
Of course. Everybody see Ravenwoods. I have a
awesome.
client with a private in Ravenwoods right now. Bowen, Gulf Islands.
Yep.
Oh, nice.
Yep.
Scooter. Hey, buddy. You got some Bowen love here. Okay. And then holdcos, operating cos.
Yep.
You don't matter. Doesn't matter.
Doesn't matter. As long as there's a personal guarantee, we're fine.
Okay.
Yeah.
Okay. Excellent. Okay. So you've got some Trivial Pursuit questions. We've gone a little over time. We're having fun. Fire away question number one. I will watch the chat.
Okay. So I got 3 questions here, guys. You guys may have to do a little research here because I don't know if I covered
Yeah,
it.
that's
But
fine. That's fine. We like tougher questions and we like them when they're not yes, no, and true, false, because then it's more fun.
does anybody know what the name of our broker rewards program is called?
I do not know the answer to this question.
We have to
Might have
do a
to
little
Google it.
research.
Who's Googling? Who's Googling right now? Broker rewards. He's got amazing prizes, just so you know, like amazing prizes. He's taking you golfing
There we
too.
go, Lauren.
Oh, Woody, you don't disappoint.
Nicely
Don't
done.
disappoint. You're golfing this weekend with Jake and Whistler. That's the number one prize. That's the number one prize. You're driving the cart. Just kidding. Awesome. Woody nailed it. So does he have 10 hours? She shoots 250-ish. That's her handicap. That's on this. That's strict. It's a Stapleford. So on the front nine. I love that.
I'll
Nice
probably
work.
do the same tomorrow.
Woody nailed number one. Number two.
Number 2. What was it here?
He's got messy writing. That means he's got high IQ, everybody. I can see. I can't even read his writing.
What year did we enter the Canadian mortgage space?
Oh, there it is. Lenny.
Leonard.
Lenny Sul Sul. Nice job, you. Well done. All I see is the eyes. The eyes of Leonard. It's like the eyes of Sauron, but it's the eyes of Leonard. Oh, there he is. There's a smile. We love it. Okay, Lenny, well done. You get a prize too. You're golfing with Lauren and Jake and Whistler. And the last person in the foursome is
Okay.
the person who answers this last question.
I'm not sure. I think you guys should be on our mailing list. Maybe not. But we just launched a new program this week on Monday.
Ooh.
Does anybody know what that is?
Oh, damn it. I don't know if you are. We'll make sure you're set up on that
Yeah.
for that because we want that for sure. Um,
It should be on our website if you guys haven't gotten
what is the new program? I typically ask that one too.
Yeah,
Is it as a
job,
variable?
That's right. That's
So
right.
Bash, you got it. Arm. Barbara nailed it just ahead of Josh. Wow, that's awesome. So give us 10 seconds on the arm. Prime Plus kind of
Yeah,
auto.
so we launched our a variable for commercial and resi.
Okay.
So we're still tweaking around with the pricing on residential, but on commercial right now we're starting about prime plus 2.5.
No.
And then
There you go.
residential we're like prime plus 2, and again we're kind of tweaking that right now as well. But yeah, just launched that this week.
Awesome. Okay, I've got some lightning round questions for you. Everybody, we're good? We're good with the trivia questions. Also, he's got some swag bags for people, but we're not going to do questions for that. We're just going to, hand those out here and there. It's very nice. Look at these lovely bags over there. They're beautiful. They're beautiful. They have half tees, crop tops. Crop tops for the boys. Okay. If you were leaving on a personal trip tomorrow,
Okay.
where would you go?
Great question. I would say honestly, I've heard phenomenal things. I haven't been yet, but I want to go to Hawaii. I want to check out Hawaii.
Hawaii?
Yeah,
You never been?
never been.
Oh my God. Well, yeah, you're from Toronto.
Yeah,
So people don't go to, they go down, you go down to like the Bahamas and things like that.
Bahamas, Florida.
And-
I've been in the West Coast. I want to go.
Well,
check
that's
out
funny.
Hawaii.
It's a great segue because some of us are going next Wednesday.
There we go. Where are you guys going?
Waikiki.
Oof,
With the Sheraton doing all sorts of fun stuff.
nice.
Yeah.
That'll be fun.
Yes. How many more BOC rate cuts in 2025?
I think that's it.
Okay,
I think that's
we're
it.
done. Do we get any rate cuts in 2026?
Maybe one more, but
Okay, so down to
it's
two and a
benchmark,
quarter,
what, 2 and
2.5 right now.
yeah, 2.5,
Okay,
right?
down to 2.25.
Yeah.
That's what the market's pricing. What was the last restaurant that you dined at? Not like a fast food thing, but like an actual restaurant.
I just got back from Miami actually fairly recently, so I was at Carbone in Miami, which was nice, really nice.
Nice, nice. What's the last book you read?
Last book I read was well, we're doing our mortgage license right now, so I've been studying for that.
Yes.
But like kind of into like autobiography, so I was reading Shoe Dog by Phil Knight.
Phil Knight.
That was a really good book.
Yeah, I enjoyed that movie too. It was pretty cool. What show are you currently watching or most recently finished? I know it's Vanderpump, but besides Vanderpump.
I don't know. I love reality TV.
Uh-oh.
I do love
Oh
reality
no,
TV.
we'll try not to hold it against him, but I appreciate the honesty.
But I'm into this show called Industry. I've been binging it over the last couple of weeks. So it's on HBO.
Yes.
Yeah, it's like a group of younger
Is it stock market related?
stock market, yeah.
Yeah.
Kind of just started in their careers.
UK?
UK, yeah.
Yeah, I think I watched a couple episodes. I get like a thing for like a month and then I cancel it.
Yeah.
And then whatever. So I think I've watched some of that.
Yeah.
Favorite movie of all time?
Well, Wolf on Wall Street, what's that?
Boy, I love this. That movie's pretty fun. Favorite band of all time?
Favorite band.
Hard to say, I
That
understand.
is.
You can also say here this thing.
I just when I was in Toronto, I went and saw Oasis.
Oh,
So they were pretty good.
okay.
Yeah.
Okay, Oasis, they're still kicking.
Yeah.
Okay. And did you drive here?
I did.
You drove here. What was on? Were you listening to
Um,
podcasts, radio, music?
I actually just had the radio going, just
Okay.
like house music or whatever it was.
House music,
Yeah.
getting pumped up for the
Get pumped up
for the podcast. Yes. Do you listen to any podcasts?
I do. I listen to I think it's what's called the Canadian Real Estate Investment Podcast, I think it is. So I listen to that a fair bit. I'm trying to think of a little lighter hearted one that I listen to. It's more like just kind of investing podcasts, things like that. It's kind of what I listen to.
All business over here. And do you listen to any, well, no, you just said you listen to the Canadian Real Estate Investment Podcast. So yeah, you do. That was my last question. This is awesome.
Thank you so much, Andrew. Appreciate you guys having us. Thank you
Thank
for
you,
your
Jake.
time and spending the morning with us. So appreciate that.
Yeah, definitely. Thanks everybody for joining us today. That was really, really awesome. Any questions? You find some files. I know you're going to see these. These are files that we all see out there. And that pricing is excellent because it is so near B that it might work better for some clients, than actually trying to shove something into a B,
Yeah.
Kind of thing. So you guys have a great day.
Thank you, everyone.
And I will see you in 2 weeks. You'll see Woody next week. Yes, you will. Have a great day.
Thanks, guys. Thanks for your
Bye.
time.